Dear God, our Heavenly Father, I want to thank you this morning for your wonderful Sunday in the mountains of Nyanga. Your children we've gathered here, Almighty Father, for this winter school. May you begin with us, Lord, this process. May you bless, Almighty Father, the moderator, our MC, the speakers, and all people who are gathered here. We are gathered for a reason, Lord, to educate one another, to learn, to relearn and unlearn some of the things, Lord, in our industry. May, Lord, by the end of the day, may we benefit from this school. Father, we rebuke any machination of the devil, that no one amongst us, Lord, will come out sick in this place, Father. We defy the devil in the name of Jesus Christ. Amen.
So much for that. Thank you. Welcome, everyone. Those who are here for the first time, thank you so much for joining us. It is an exciting program. I was here last year. I benefited a lot, and I'm telling you, today and tomorrow, you are going to learn, and you're going to have something that you're going to take back to your organizations. At this moment in time, I'm going to invite Mr. Davison Choini, IIZ General Manager, for opening remarks. May we kindly give him applause as he comes up front. Thank you so much.
Thank you, our wonderful MC. And thank you, Kelvin, for a beautiful prayer. We really appreciate it. Thank you. Ladies and gentlemen, allow me to appreciate the presence of Madam Siwela from IPEC, our Director of Insurance and Microfinance. Allow me as well to appreciate and welcome my principal. But anyhow, feel welcome. Let me also welcome and appreciate all board members of IIZ that are in our midst. I might have not seen one or two, but wherever you are, feel welcomed. Let me also welcome our speakers. I've seen Dr. Magaya. Sir, we don't take it for granted that you found time to be with us. this day. Patrick, most welcome, my brother. Pesci, I haven't seen her, but I know she's within the congregation. Feel welcome, Patience. Lens, Boaz, Tao, and all others that I might have forgotten to mention, all our speakers. We value your presence and thank you so, so much. Ladies and gentlemen, welcome to the Insurance Institute of Zimbabwe Winter School, where we embark on a journey of exploration, learning and growth under the theme, disruption and opportunity, equipping the Zimbabwe insurance for the future. This gathering marks a pivotal moment for our industry, a moment where we confront the challenges of disruption with a spirit of resilience and seize the opportunities that lie on the horizon. You will appreciate, ladies and gentlemen, that as IIZ, our trust is skills development. And this is another platform that we use to develop those skills. And appreciate that our industry have gone through a sizable number of challenges. And we are entrusted in this room, all of us, to make that contribution and make the industry a success and a pride that we can all be happy about. In the face of unprecedented and technological advancement, evolving customer expectation and shifting regulatory landscape, the Zimbabwe industry sector finds itself at a crossroads. It is a juncture where we must not only adapt to change, but actively embrace it as a means to innovate, evolve, and thrive in a dynamic environment. The Winter School, ladies and gentlemen, serves as a beacon of knowledge, a hub of collaboration, and a springboard for progress within our industry. Over the coming days, we have the privilege of engaging with experts. I have already alluded to some of them, and believe you me, these are loaded experts. And I can assure you that as we leave this, you will have been transformed. We want to take this opportunity to exchange insights and honoring our skills to equip ourselves for the challenges and the opportunity that awaits us in the future. I encourage each of you, ladies and gentlemen, to approach this winter school with an open mind and a sense of curiosity and a readiness to embrace change. Let us engage in thought-provoking discussions, challenge conventional wisdom, and explore new avenues for growth and development. I'm confident that the knowledge, insights, and connection you are going to gain during this winter school.
We would love to appreciate our sponsors who have made this event possible. We would want to appreciate and acknowledge the support of Nyaradzo Group, Old Mutual, Bright Insurance, Mukari, Sauzi, Waikari, Doves, and Emeritus. We really appreciate their support, and those who are here, we can also support these events. Some of the companies that are not listed here, we would appreciate your support, and we would love to have you on our program next year. At this moment in time, allow me to call upon IIZ Chairman, Mr. Gordon Mashiri, as he comes through for keynote address. May we welcome him, please?
Right, thank you very much. You know, it's always tough to be given that honor to set the tone for anything. If it's a wedding, if it's a party, if it's a function, if it's a formal gathering like this. You're the one who's supposed to ensure that people continue to enjoy and continue to drive to the purpose that they have. That has been said. So, whilst I've been given a speech, I'll start off by saying a couple of things before that speech, because I'm going to read the speech I'm reading on behalf of the President. Allow me to say, Madam Siwela, representing IPEC, the board members here present, guest speakers who are here, the industry sponsors, they're very critical. The Montclair team, led by Mkoma Brian, I call him Mkoma, we go a long way. Ladies and gentlemen, all those who have come here to get some knowledge or to do something else, I'd like to say welcome to our IIZ Winter School. So before I go on to the speech itself, I want to challenge all of you individually for you to ask and just write down 3 issues. There are papers there that you have. Please write it down. What's my purpose in life as an individual? Just write it down. What's my purpose in life? I don't want an answer now, but just write it down. Why are we here today? Write it down. Why are we here today? And what's my expectation by end of the week? What's my expectation? I won't come around asking after on Wednesday, but I hope and trust that for your own sake, you'll have answered those questions by the end of the winter school. Having said that, there are certain things that we expect as part of the insurance industry and as the team that has been mandated to train the industry. There's a certain quality that we are expecting the future generations to pass on to the next generation. I'm saying the future generation because I'm probably getting out of the industry. Young as I may look, I'm actually very old. So I'm actually on my way out. And you're the future, right? And you're going to pass on a certain button stick to the next generation. So there's certain things that we expect you guys to do. One of them, sorry, General Manager, today we started late. As an industry, we should never start late, right? That's one of them. The next thing was when you look at bankers, when you look at other industries, they've got a code of ways of doing things, which is not spoken, but it's done, right? And it's our responsibility to set that tone, right? Next thing is, how do we participate in programs that have been given to us as an industry? Because you are part of the industry. You're the industry. How do we participate? Because participation then gives us the outcome. And it's good that you guys have shown up. Showing up is the first thing. So we expect that everybody participates. So those are the 2 areas that I thought I would just highlight as we go into the rest of the program. So I'll now read the speech. on behalf of the President and say, I'm honored to welcome you all to the Insurance Institute of Zimbabwe Winter School, where we gather to explore the theme, disruption and opportunity, equipping the Zimbabwe insurance industry for the future. This theme encapsulates the essence of our industry today, a landscape shaped by rapid changes, challenges, but more importantly, boundless opportunities for growth and innovation. So as I speak, I'll divert here and there. Right? We shall get from the guest speakers definitions, things, big words that will come through. Let's really understand them. And as we go into our focus groups and whatever, really ask those questions. What does innovation mean? Where is the innovation? In a world where disruption has become the norm, you know, people just say disruption, disruption. How do we define disruption? Please get those definitions right. Where's the norm? The insurance sector itself stands at a critical juncture. I think Davison mentioned it, where we are presented with challenges and which demand agility, foresight, and adaptability, and learning. We need to learn. It's very critical. And you're showing up to get some information, to learn, ought to be commended. However, within every disruption lies the seed of opportunity, a chance to redefine our practices, embrace emerging technologies, transform the way we serve our clients and communities. As we embark on this journey together, let us not view disruption as a threat, but as a catalyst for positive change. Let us harness the power of innovation, data analytics, digital transformation to propel the Zimbabwe insurance industry into the future, defined by resilience, efficiency, and customer centricity, which is very critical. I saw the lineup that's there. I think it answers most of the issues that the President is telling us to do. The Winter School offers us a unique platform to delve into the pressing issues, to exchange ideas. Remember I said, show up and participate. Let's participate, let's exchange ideas. And if you come to the Winter School and you don't say a thing, if you're at my place, my workplace, I think I would think that that was a wasted amount because you have not participated. So you need to say something. Let's exchange those ideas and let's equip ourselves with knowledge and skills needed to navigate the complex terrain of modern insurance. Insurance as we used to know it is no longer insurance. It's changing. And we need to get the skills that we're going to get today and during this week to review how we were doing things. Let us seize this opportunity to learn from our speakers, to challenge our existing assumptions, and to envisage a future where disruption becomes a pathway to success. It's very critical. Together, let us explore the intersection of disruption and opportunity, and let us emerge from the Winter School equipped with tools, insights, and inspiration to propel the Zimbabwe insurance industry to a brighter future, which is more sustainable. Because if we're not careful, the insurance industry is going to be a dying industry. So it's up to us to ensure that we equip ourselves with things that ensure that button stick goes to the future. Otherwise, thank you very much for your commitment and excellence in innovation and the progress in our profession. I wish you all a transformative and enriching experience at this Insurance of Zimbabwe Institute Winter School. Thank you very much.
What is my purpose in life? Why are we here? What is my expectation? I do believe whenever we gather, people do have expectations. People hope to receive something. They hope to gain and get something. And I do hope when we're preparing to come to this place, in your mind, you were expecting something. Disruption and opportunity. Disruption speaks to a change of the normal, a turn of events from what we know them to be and what we are used to. So I do believe you are prepared for this session that we are about to get into. I'm going to invite our speaker, our first speaker for the day, who's going to talk to and about regulation and compliance. Our first speaker is Mrs. Sibongile Siwela, Director of Insurance and Micro Insurance at Insurance and Pensions Commission, IPEC Zimbabwe. Sibongile Siwela has over 30 years working experience in the insurance industry. She joined the Insurance and Pensions Commission in 2019 as the Director of Insurance and Micro Insurance. Prior to that, she worked for a leading life insurance company for 27 years, where she served in various managerial positions in the insurance value chain and gained invaluable experience in insurance business. She has 4 years insurance regulatory experience. Her responsibility at IPEC include, among others, prudential supervision and market conduct regulation to ensure financial soundness of the insurance industry and the protection of policyholders, as well as development and innovation of the insurance industry. She holds a master's degree in business administration and a Bachelor of Science honors degree in risk management and insurance from the National University of Science and Technology, NUST. She also holds a diploma in Insurance Institute of Zimbabwe, IIZ. Ladies and gentlemen, let us give her a hand as she comes to present on regulation and compliance. May we kindly continue to do so until she reaches the podium.
Let me start by saying it is a privilege for me to be here to talk to you about issues of regulation. It is not so often that we get a chance to sit and talk about regulation. So let's take this opportunity to really try and understand what insurance regulation is all about. Most often we hear that insurance is heavily regulated. Yes, it is, but there are also reasons why it is heavily regulated. So to kick off my presentation, I will talk a bit about IPEC, what IPEC is. I will also talk to the IPEC strategic map. I will define the insurance regulations, the rationale for regulation, and I will pick at key areas of regulation and also other areas of compliance, and we will conclude the presentation. Just to talk a bit about IPEC, it is a statutory body that was established in terms of the Insurance and Pensions Act, Chapter 24 of 21. It is formally the Department of Commissioner of Insurance, Pensions and Provident Funds, in the Ministry of Finance, and it commenced its operations in 2006. And the key mandate is to regulate, to supervise, and to develop the insurance and pensions industry for the protection of policyholders and pension scheme members through regulatory excellence. And we're currently regulating the insurance and pensions provident fund schemes. Just to walk you through the IPEC strategic map, we draw our strategy from the National Development Strategy, NDS 1, from 2021 to 2025, which also draws its strategy from the national strategy, which says from the Vision 2030, which says towards a prosperous and empowered upper middle class income society. And the vision for IPEC is towards a safe, a vibrant, and a sustainable insurance and pensions industry by 2025. And our mission is to regulate, to supervise, and to develop the insurance and pensions industry for the protection of policyholders and pension scheme members through regulatory excellence. Our core values are professionalism, accountability, fairness, integrity, and excellence. Right, coming now to insurance regulation, and you may be wondering what it is. It simply refers to the laws, to the rules, to the guidelines established by government agencies to oversee and control the insurance industry. And its main objectives are to protect consumers, to ensure financial stability of the insurance companies, and to promote fair competition. And regulation can cover various aspects such as licensing, solvency requirements, rate approval, consumer protection, product approval, as well as market conduct. One of the reasons we regulate is we want to protect consumers. I think we all understand that insurance is a technical area, and most consumers do not understand most often what they are signing for. So as a regulator, we stand in the gap with the aim of protecting the policy holders. We also want to try and minimize market failures, such as economic crises. I'm sure we're all familiar with the economic crises in Zimbabwe, the most particular one being the 2008. So we regulate to try and minimize such failures. We also want to promote financial stability, ensure insurance companies are prevented from taking excessive risks that could threaten their solvency. The other reasons are to promote fairness, market stability, and to ensure that the industry is complying with the set regulations, as well as to boost the public confidence in the insurance industry. There are two types of regulation. There's state regulation, where government enacts an enabling act of parliament to create a statutory body to regulate a specific sector, e.g. in this case IPEC, and then IPEC carries its mandate through the Insurance Act, ensuring that all the insurance players comply with the Act, and it also draws further regulations such as guidelines, directives, frameworks, circulars. I'm sure you are very familiar with this. There is also self-regulation, where the industry comes together to form association bodies and agree on professional best practices, best ethics, and standards to follow. And players of the same trade are expected to abide by agreed guidelines. Under such associations in Zimbabwe, we do have such associations as ICZ, LOA, ZAFA, to mention but just a few. And the regulator only comes in when the self-regulation has failed. One of the areas of regulation is prescribed assets, which is according to SI 206 of 2019, where insurance companies are expected to invest a certain percentage of their assets towards national development to promote stability, enhance social goals, and protect policy holders. Next slide, please. As an industry, we do not seem to be doing well in this area. This is an area of concern where all the sectors are underperforming in this area. I'll just go through the short term. As of first quarter 2024, they were 9% compliant. Reinsurers was 16.41% compliant, and the life industry was 8.47%. That is not a good rating. I think more needs to be done. The insurance industry has been, in an effort to aid performance on this, has been allowed to come up with projects of their own, which can be accorded the prescribed asset status. We also talk about minimum capital requirement, and these are prescribed capital levels required for an insurance company to commence insurance business. It helps to measure the solvency of an insurer at any given time to reduce the risk that an insurer will be able to meet its financial obligations due to financial distress. And the new statutory instrument on MCR is yet to be gazetted. Colleagues, you are all aware that the minimum capital requirements are currently in RTGS. They've been converted to ZIG, and they do not speak to the risk that the industry is carrying, and therefore USD MCR has been developed and is currently awaiting gazetting. The industry is aware of this, and we're urging everyone to be prepared, because when it is finally gazetted, it will be today and tomorrow. We expect you to be compliant. These are the new USD minimum capital requirements that we expect to be gazetted anytime soon. And according to our assessment, the ratings there are the industry compliance. When we go through the figures, we realize that the short-term industry is almost compliant. I think one entity is not meeting the requirements only. It is at 90% compliant. The life industry is at 83%. The microinsurance industry at 75%, and the funeral assurance industry is at 12.5%. We also have regulations around the area of governance, where we speak about shareholding, board of directors, the composition of board of directors of an insurance company, the control functions, and the structure of board committees of an insurance company. On shareholding, we do have an existing law, SI 49 of 1989, which was also amended in 2005. It requires that an insurance company should have at least 3 shareholders. No one individual is allowed to form an insurance company. And individual shareholders and their close relatives are prohibited from owning or controlling more than 40% of the voting shares of an insurer. So a family is restricted to a maximum of 40% shareholding of an insurance company. And you may ask why all these restrictions. This is to avoid overbearing influence of one individual collecting premiums from members of the public and solely making decisions on people's money. Again, these are the compliance levels, speaking to shareholding compliance. I think only microinsurance, the sector, is 100% compliant, followed by the reinsurance brokers at 88%. The entities that are not compliant, we are currently working with them towards compliance. And I must say that there is a lot of effort from the industry towards complying with this requirement. Board of directors, another area that we regulate in the governance area of an insurance company. The board of directors is a group of individuals elected or appointed to oversee the management and operations of a broker or an insurance company. And the board is responsible for strategic direction, for oversight, for governance, and for financial stewardship and accountability of an insurance company. And the regulations require that they should at least be, at a minimum, there should be 3 directors in terms of the insurance regulations. The majority of these directors should consist of non-executive directors, and the majority of whom must be independent to promote objectivity and decision making. And the board must have a balanced skills. We do not want a board that is full of accountants only, or the board that is full of insurance people only. We expect that at a minimum, the board must have skills in insurance and risk management. It must have skills in law. It must have skills in accounting and finance. Then you can add any other skills. We've seen engineers and doctors also coming on board. Those are also useful skills, because more often you need people who do not understand the subject matter and they ask good questions. The board must be approved by the commission through a fit and proper assessment. The control functions merely speaks to head of compliance within an insurance company, the internal audit, and the actuarial control functions. And the head of each control function should be approved by the regulator, and an insurer must not outsource heads of these control functions without the approval of the regulator. And an insurer must have a compliance officer who must stay up to date with regulatory changes in the insurance industry and avert penalties. We do issue penalties when compliance is not met. And important for me to mention is that finance directors and head of finance and administration and similar titles are prohibited from being compliance officers because of the conflict of interest And coming now to the board committees, at a minimum, the board should have the risk management committee, the nomination and remuneration committee, audit and finance committee. And each board committee should be structured in a way that ensures necessary authority, independence, and direct access to the board. And it must be properly constituted in terms of the requirements laid in the Directive on Governance and Risk Management for Insurance Companies. Treating customers fairly, we expect this to come naturally to the insurance industry, but most often we do get complaints that are escalated as far as the commission, because the policy holders would be perceiving that they're not being treated fairly. So we came up with the Treating Customers Fairly regulations or a guideline, and it says the board of every insurance and pension service provider shall develop its own Treating Customers Fairly policy in line with the IPEC TCF framework and ensure its documentation and adoption by the board. I think that this is an area that ensures that we'll continue to get business from members of the public. I don't think I need to elaborate on this. We'll move forward. We also do regulate commissions that are offered by the industry. We have seen commissions as high as 55% of the gross premium, and if you pay a commission of 55%, how are you going to pay the claims? How are you going to meet the administration expenses? So it is an area that we also regulate, that we expect the insurance industry to conform with. We also came up with ZCAP, which is a risk-based capital regime. It was implemented in January 2024. The regime links the capital requirements of insurers to the risk profile that they are carrying. It merely says if you are carrying a small risk, your capital should also match your risk. But if you have a huge risk, you must also have a huge capital. It is a ladder of supervision where struggling entities are identified and assisted to improve their soundness. Insurers are required to perform assessment every quarter as we await the promulgation of the instrument. The regulations have not yet been promulgated, but we have started working in that mode, in preparedness for the regulations. Can we move? There are other areas of compliance and regulation. I will not dwell much on them, but I will mention a few in passing. Claim settlement, we expect claims to be settled within 7 days. We expect the industry to submit returns quarterly. On dates that are subscribed, we expect the industry to pay levies quarterly and annually. The No Premium, No Cover SI was promulgated in May 2023, where the debtors were contributing about 40% of the gross premium. We've seen it come down to 6% of the gross premium as of Q1 2024. I would also like to talk about the agriculture insurance regulations, which we're currently drafting. There are lots of efforts that are currently happening in the industry, but there are no regulations to guide the industry on agriculture insurance. So this is an area that we are keenly wanting to develop, and we have already started work towards drafting regulations. And in conclusion, it is our expectation that the industry will self-regulate and will only come through where the industry has failed to self-regulate. The global environment is ever-changing, and IPEC is trying to keep abreast with the developments and compete in the same global village. There are others also, the IFRS 17 accounting standard that we implemented in 2024. We expect the industry to be compliant with that. IFRS 17 accounting standard is an international benchmarking, is an international accounting standard that everyone at the end of the day is expected to comply with. Ladies and gentlemen, this brings me to the end of my presentation. Thank you. Actually says why we should have a regulator. Imagine with a regulator following up and chasing up everything every day, the industry is still non-compliant. What if there was no regulator? It could be worse. I must say though that we are all very concerned about the non-compliance up to the Ministry of Finance level. The ministry is concerned to the extent of wanting to close non-compliant companies, especially with the prescribed asset requirements. It is a concern, but they will also give you the reasons why they are not compliant, why they're not compliant. They say with the current environment, where inflation is reigning high, they're chasing a moving target. So the industry can meet the requirements today, but come tomorrow because of the forces of inflation, the target has moved, and they have to go back to the drawing board and formulate new strategies to comply. So they are ever chasing this moving target. Coming from the US dollar era where the industry, where there was financial stability, the compliance levels was not as low as this. I don't know if I've answered you.
Thank you for that. Any more questions or comments? All right.
And also just to add, he mentioned that it is, he's an engineer in insurance. So what we do is to insist on the basic requirements before a board can add another skill that is not mandatory. We do get cases where an insurance company wants to start by putting engineers, for instance, before they put a person with risk, a person with law. And we always encourage them to say, can you start by filling these other positions and then come to this other one? Thank you.
Okay, morning team. Yeah, I'm Romy from IIZ Insurance. So I need to be assisted like on claim settlement, like from the recent compliant thing you are saying a claim decision must be made within 7 days. and a payment to be made in 3 days. So us as an insurance company, I think most of us are failing to comply with that 3-day payment, mostly in cases of big claims, because we are having challenges, for example, in recovering those payment, like those funds from the insurers. So it is becoming difficult for us as insurance companies to comply with that 3-day payment. Thank you.
Maybe you should go deeper and explain where you're failing to recover from reinsurers. Reinsurers are here present, maybe they would want to speak for themselves.
Let me try to explain. So when I receive a claim, I notify the reinsurer. Then after receiving my reports, I make on settlement details, share the documents with the insurance broker or direct with the reinsurer. So the time it takes for the funds to come to the account of the insurance company is over 3 days. So it is making difficult for us insurance companies to pay in 3 days.
I think our team should visit CBZ. Inspection. Yes, please say, you want to say something?
All right.
The reinsurers are in the house, and we are thoroughly shocked by such allegations, Mrs. Siwela. Firstly, I think let's clarify something. For us to say we cannot pay claims in 3 days or whatever time period because we are failing to recover within 3 days from the reinsurer, I don't think is a correct position. And why I say this is not a correct position, the principle of reinsurance that we all know is that reinsurance is a contract of indemnity. So you do not recover from the reinsurer before you actually pay the claim. So the reinsurance contract has nothing to do with your payment of the claim. Ideally, when a claim comes, you should settle your claim and then speak to the reinsurer to recover. Because we said it's a contract, and this is Reinsurance 101 that we are teaching at IIZ. This module is at IIZ, and I know about this module because of in my other life, okay? So, Mr. Choeni, I think we need to go back to the basics of this module and discuss. So, Mrs. Siwela, it's not about the reinsurer not paying claims and whatnot. It is simply a process. So guys, if we're not paying claims, and by the way, I also had a claim of mine that was not paid in 3 days, so I'm also an aggrieved customer. If we're not paying claims within 3 days, it is not the reinsurer. There must be a process flow that is not happening properly. So let's address the process flow, whichever way it is. Yes, we intimate with the reinsurer and advise them that there is a claim. But once the claim has been settled, that's when we deal with the reinsurer. Because the contract, remember we said the contract is between the insurer and the insured, not the insured and the reinsurer. So for you to tell me as the insured person that I'm waiting for the reinsurer, I think that becomes scandalous. So, yeah, I think without further ado, Mrs. Siwela, I think this is the correct position. So let's correct that. If there's something happening at CBZ specifically, then I think, Mrs. Siwela, this is an opportunity to go and do an on-site inspection and see what's going on. Thank you.
Thank you so much. All right.
Said, I think yes, it's a regulation that has been put across that we are supposed to pay within 3 days, but maybe it's also a challenge to comply with that regulation, given like what is happening within our economy in terms of liquidity. I think generally insurance companies are being affected by these issues. So My view is yes, the regulator has put maybe an instruction that we are supposed to comply with, but to avoid the 40% compliance and the 20% compliance ratios, we should try, but we should also give feedback to the regulator with regards to the challenges that we are facing, so that we reach a position where every entity is able to comply. But then I think it also emanates also from issues of cash before cover, where maybe in terms of collections, there might be a challenge there, because if you are collecting very well, then we shouldn't face these challenges. So it's a domino effect, but we need to address the main challenge. Thank you.
Maybe if I can also come in, this is a new regulation that was put in place in January 2024. We used not to have this regulation. Whilst we sit here and give all the reasons why not to pay, can we also think about the client? What is the client supposed to be doing whilst we tell all these good stories about not paying? Are we also not shooting ourselves in the foot? Is such a client going to take an insurance product again with your company? Or is he going to be a good ambassador about CBZ? Sorry to use you as an example, for instance. So it came about as a result of many complaints that were coming through to IPEC because of non-payment of claims.
I'm just looking at the theme of the winter school disruption and opportunities that come with disruption. And from the presentation, I understand the reasons why the industry is highly regulated to protect the consumers. But I'm also wondering at what point IPEC creates an environment conducive for disruption, for innovation, or accommodate it. Because I think there is a thin line between, regulating and then also stifling innovation and disruption. So I wanted to find out, is there room, conversations, discussions, even at IPEC, on how to handle perhaps innovation that can come in the industry in a way that can even accommodate disruption, so that there's still regulation, there's still regularization, but there's also room for innovation and disruption.
Thank you. Fair question. IPEC is very much interested in innovation. In fact, one of our key mandates is to develop the market. And we can only develop the market through innovation. I think the industry is allowed to be disruptive as much as possible, but within the given confines of the regulations. You can't then say, because I'm innovating, I must break the rules, because the rules are there to serve a certain purpose and to safeguard the members of the public against such innovations. We do have a product approval process, so companies are allowed to be as much as disruptive as possible. But within the commission, we have a committee that then looks at these innovations and looks at what could possibly go wrong and what would be the impact if something went wrong. I'm sure you also want to be protected from such. You do not want to have a free will of just innovating anyhow. Maybe you come up with a very innovative product, collect so many premiums, but you're not able to pay the claims out of those premiums. It then becomes a problem for tomorrow. So yes, you are allowed to innovate as much as possible, but allow the Commission to also understand the process, to be appreciative of your innovations and have it approved, so that then you run with it. Because if there is a problem, I can guarantee you, your customers will be knocking at the Commission's doors, and we don't want that to happen. Because at the end of the day, it's a brush that is tinting the whole industry black if there's a problem. Thank you.
Thank you, ma'am.
Please do feel free to innovate.
We do have another question here, or comment.
Morning, everyone. Mrs. Siwela, just to seek clarity on the no premium, no cover SI, was this put applying across to reinsurers, or is just applying from the primary client to the insurers?
Tricky question. I think it applies to let me say across the industry. We expect the whole industry to comply with the regulation, particularly the short-term insurance industry. In the no premium, no cover regulations, the only exemption that is there is on agriculture insurance products that are on stop order. We've seen some just covering all agriculture insurance and mentioning them as
mine is a comment pertaining to the non-compliance on the minimum capital requirements. I would like to think that we have got two forms of capital, which is the minimum capital requirement and the economic capital. I think with the CCAP in place now, insurers are better employed that they keep more economic capital, which is in line with their risk profiles, such that when the moving target, as the director rightly said, we are chasing a moving target. When the target moves, you don't automatically fall into non-compliance if you've got a buffer between your economic capital and the minimum, because what is set is basically the minimum. You are allowed to go even higher than that, so that you don't automatically non-comply in the event of the exchange rates moving. Thank you.
You move in line with your USD. You simply convert it to RTGS. Our capital remains the same. If it's 2 million, it remains an equivalent of 2 million in USD.
Okay, thank you. Firstly, I would like to appreciate the fact that the regulator is well aware of the high commissions that are being charged in the market. I think you've indicated that they are going as high as 55%, which is even more than the break-even point. So my question now is, what is it that is being done so that we ensure that a standardized commission are being charged across various classes of business, and as well there's an issue of depressed rates that are being charged on the same class of business? And as we are all aware that a depressed rate and high commission, it's really starving us as a reinsurers. So that's my comment.
Thank you. On high commissions, this is an area that we look at every quarter after you've submitted your returns. We sit down to look at who's paying what commissions, and we do have engagements with the companies that are seen to be paying very high commissions. This mostly resulting in penalties on a quarterly basis. We've seen an improvement, but this is an area where we're keeping our eyes on and asking the industry, why are you paying this 55%, this 40%, going as far as penalizing the non-compliant insurers. It's unfortunate we then don't go on to write in the report that we've penalized this one and that one. Maybe that would cure the problem. But we are taking action on the high commissions, on the depressed rates. I think it also speaks to non-payment of claims, because if you are going to undercut your rates so much, but when it comes to claims, you're not able to, then how are you expecting to manage the whole process? I think it also talks to self-regulation. This is an area where we expect insurers to also self-regulate, because the regulator is not going to be there every day, everywhere where we are doing these misdemeanors. We expect professionals to know what is right and what is wrong, and to abide by the correct standards. I hope I've answered you.
I think they are answered. Thank you so much, Mrs. Siwela. May we kindly give a hand of applause? May we give a hand of applause as she sits down? Thank you so much. I noticed that a lot of people still had questions. I had to close that one. It was an exciting, and I'm sure, and I noticed that it raised a lot of questions. Thank you for the presentation.